Thomson Reserve. A lot of people are actually very excited about this project. In fact, I think this is going to be the most popular blockbuster launch in 2026. Even though we do not have the floor plans and the exact prices yet, but there are actually quite a few concerns with regards to this project, especially since developers also know that this project is going to be very popular. In this video, I'm actually going to break down why I wouldn't buy Thomson Reserve if I am a buyer, and at the end of the video also weighing out all the good things about this project as well, and what do you expect to avoid overpaying in a very popular launch like this in Thomson Reserve. So this is going to launch in September 2026, very soon. Thomson Reserve is a block project in District 20 and very near to the MRT, which is 1,268 units ranging from 2 to 5 bedrooms, most belonging to the 2 to 3 bedrooms. This project is segmented into two different collections. First is in terms of classic collection and next luxury collection, which we are going to talk about the 4 bedrooms and 5 bedrooms that come with lift. This is about 2 minutes walk to MRT. Also, within 1 km to Ai Tong Primary School and minutes away from very popular eateries, Thomson Plaza as well. Based on how Thomson Reserve looks like, it is surrounded by many landed enclave and also towards the further end MacRitchie Reservoir as well. If you manage to buy a unit in Thomson Reserve, is good views either overseeing the reservoir, landed, or even units that are facing inside. Based on the project info itself, you would already know that this is going to be popular because in a lot of emotional aspects, it fits into a lot of buyers' checklists of what they actually look for in a dream property. But as always, because this is such a popular project, I do have my concerns as well, right? But before I actually run through this, because we do not have the price list today, and I also don't have the floor plans, so how to estimate the size? Which is why I use this project, which is Skye At Holland. It was launched in October 2025 last year, and it sold 99% during launch. So this was quite a sought after project, and it is developed by these 3 developers also, which is CapitaLand UOL and Singland. And similarly, in terms of unit mix, Skye At Holland has 2 to 5 bedrooms. And the 4 bedrooms and 5 bedrooms actually has private lift, which is very similar to what Thomson Reserve has. If let's say the sizes here is very similar to Thomson Reserve, we are going to do the price estimate. Suppose that prices is across 2007, 2008, and mainly average per square foot is 3,000 per square foot. This would be the rough price. Of course, a lower per square foot would mean it is on a lower floor, maybe the view is not so nice, and higher per square foot would mean that units will be on the best views with the highest floor. And in this case, for Thomson Reserve, the highest floor for the smaller units will be roughly 21 stories, whereas the luxury blocks, which are the 4 and 5 bedroom with lift, will be the highest 30 stories. So with that being said, in terms of the per square foot, for the smaller units, lower floor, maybe we can expect prices to start from 2008 to 2009 with the mid floors at 3,000 per square foot. Prices will range from 1.6 for the smallest 2-bed 1-bath if they have one. 2-bed premium will likely start from $1.8 million. And as for the bigger units such as the 3 bedrooms, if they were to start at a price of 2,728 per square foot, will be $2.5 to $3 million respectively. Of course, when we are looking at the luxury blocks, which are the 4 and 5 bedrooms per square foot, will be higher. Before I actually run through this, would you take a moment to like and subscribe to my channel? I'll also want to invite you to join me in my Telegram channel, because this is where, apart from sharing my usual video links, I'll share with you my thoughts and also some information that you might not be able to find online, or I will not be able to share on video as well. And based on past track record, developers actually price the bigger units such as the 4 and 5 bedroom at a higher per square foot as compared to the smaller units, which means quite highly unlikely it will start from 2,728. My guess estimated is to start from $2,900 to $3,000, which brings the 4 bedroom starting price to be about $3.5 million. And as for the 5 bedrooms, closer to the $5 million mark. Of course, just to do a quick disclaimer, this price is just based on estimates only because for my video still need some price indicative to give you a clearer idea on how to plan ahead and whether this project suits you or not. This is for illustration and does not mean that this will be the confirmed launch price. Why I share with you the price estimate is because I actually want to share with you why I will not buy Thomson Reserve. Honestly, there are three main concerns when I look at these projects. The first concern is because of the narrowing price gap between the RCR and the CCR. And this is not only talking about Thomson Reserve because based on the overall prices in comparison between the core central region versus the city fringe RCR, if we look at the prices from 2014 to 2019, the price gap between RCR and CCR region is averaging about 43% year-on-year basis. In 2020, prices was as wide as 36.6%. But based on today's context, prices have narrowed all the way to 19%. Why is this a concern to me? It's because these are the impacts of what happens when the per square foot between the CCR and RCR is very narrow. Now I'm going to take two projects to give you a comparison. First is in Leiden Green, which is a CCR project. Second is Woodleigh Residences located in the RCR area. So these two owners from Leiden Green actually purchased two-bedder in 2021 at about $2,300 per square foot. A price gap that is very similar to what buyers can find in Woodleigh, also at $2,300 per square foot. So just imagine these four transactions purchased about the same time, sold during the same period. But due to location, due to buying in different regions, they actually experience very different profits. Mainly the CCR owners who purchased during the time where the per square foot was very close to what the city fringe buyers can get for, they actually profited 50 to 60% in terms of ROI. And as usual, naturally, CCR prices always tend to be much higher than RCR. Now, this is not a one-off case. In fact, when we go to another project to compare, same Leiden Green owners purchase very similar price to what City Fringe owners can get. ROI much higher as compared to what these two owners have experienced. So based on these two case studies, we have seen that as long as CCR prices is very similar to what City Fringe per square foot have, CCR owners tend to benefit more and be able to profit more during exit. Now, this does not apply only to 2 bedrooms only. In fact, when we look at a big unit, 4 bedrooms, the same behavior applies. This 4-bedder, in terms of quantum, yes, it is much higher, but per square foot wise, only 7% price gap. But in terms of selling, see, this 4-bedroom Leiden Green owner was able to sell at a profit of $1.15 million, very much higher than Woodleigh Residences 4-bedroom owner at $474,000 with ROI exceeding more than 100%. And this is not coincidental because both of these owners actually purchased during the same period of time and at this very similar time. Why is this important for you to know? Because my concern is that there is actually choices that buyers can go for in the current market. So I'm going to break down this into two different budgets. First, if let's say buyers who come into the market thinking of buying a unit today has a budget between $1.7 million to $2 million, right? Should Thomson Reserve sell at a range of $2,008 to $3,000 per square foot? Do you know that buyers can also have the option to get something in the CCR, which is more premium in terms of district and also 2-bed, 2-bath. So I'm going to zoom in into the options over here. Of course, there are smaller projects here which we shall not focus on. But if you look at projects such as River Modern, such as River Green, these are projects that are not ulu, that are really in good locations in River Valley area, for example. While I'm not saying that Thomson Reserve is something that you cannot buy, but what I'm trying to say is when buyers have choices and the option to choose between a RCR and CCR project, right? this is where I would see that demand gets diluted. And when the gap gets very close in terms of per square foot, right, based on the 3 case studies that I've shown you, that when prices between the RCR and CCR gets too close, this is where CCR will be able to benefit more. And this is not the only one that we are looking at. If let's say buyers today have a budget between 2.5 to $3 million. In Thomson Reserve, should developers sell between 2,008 to 3,000 per square foot, this budget will be able to get roughly a 3-bedroom or maybe towards a 3-bedroom premium if you get a good queue number or maybe on a lower floor unit lah. But do you know that today, if you have this same amount of budget, actually you can go for a 3-bedroom in River Modern, which is in River Valley area, and without having to ballot, but you get a bigger 3-bedroom premium, bigger unit, possibly lower per square foot at a lower quantum starting from 2.67 all the way up to 2.9 million. And this is exactly what I'm talking about. Why I want to share this with you is also reminding me don't blindly follow the crowd and end up having the risk of overpaying for a project that is very popular. Instead, just remember, especially during booking day of Thomson Reserve, to weigh out what are your next best options. Even based on your queue number, it's important to ask yourself, based on the price that you're entering at, is there other options for you to consider, especially when you're looking at your purchase from an investment point of view. And honestly, this is not the only one, because my second concern is because the prices for the city fringe area has increased so much that right now there is a wide price gap between the OCR area, which is the heartland areas. And to give you a clearer perspective, I'm going to bring you back to a few case studies as well, where we are looking at the time where the price gap between the OCR area and city fringe gets too wide. So first one I'm going to take you is actually at Clavon, which is located in Clementi. So back then in 2021, the 4 bedrooms were asking at an average of about 1,500 to 1,600 per square foot. And because the price gap is so wide when we compare it to a city fringe project such as Woodleigh Residences, right? The 4 bedrooms in Clavon Clementi was able to outperform Woodleigh Residences. Take note, Clavon is not near MRT, but Woodleigh Residences is actually a mixed development, very close to MRT, with shopping mall right below. By right, in terms of location, a better location as compared to Clavon. Now, this is not the only one. Winslow Grand, which is in the OCR area, versus Avenue South Residences. This two is also speaking the same story. Winslow Grand, if you know this location, is in West Coast area, really not near to MRT, but their profits actually outperform Avenue South Residences, which is in the city fringe, by a lot. Winslow Grand profits for 3-bedder is about 600, can cross $700,000. But for Avenue South, 3-bedders, only 200 plus to highest $360,000. And this is because the price gap between the OCR to RCR is too wide. This is not my only concern because the price gap is too wide, but it's also because when it comes to a comparison between the OCR and RCR region, there are a lot of times where buyers with given the same budget can buy a bigger unit in the OCR area. Take for example these two projects. Park Colonial is also a project that is very near MRT, Woodleigh, a very good location. And Riverfront Residences is actually located in Hougang, not near MRT at all. And what I want to show you is buyers who actually entered at around the same time with the same amount of budget. Because the OCR buyers are able to get a bigger unit with the same amount of budget, that's why they are able to profit much more. So these buyers, entry date is about the same, which is in July 2018. Date of sale is also around the same period of time, which is between 2024 to 2025. Same amount of budget, but very different profits, where we see that the OCR owners in Riverfront Residences deemed as very ulu, but the average profit is about $500,000. Whereas when we look at Park Colonial near MRT, 2-bedder, with that same amount of budget, 2-bedder in Park Colonial, their average profit only saw $300,000. So from the OCR versus RCR case studies that we have seen, right, Just to sum up, my takeaway is if let's say Thomson Reserve were to launch at a very high per square foot, it brings the gap very wide from the OCR region. It's very high chance that there are also many projects in OCR, not just one, but 17 projects across the whole Singapore that will have a very high per square foot difference of up to 40% or even more in many projects. Buyers today have the option to either swap to a bigger unit in the OCR area. That means from 2-bedroom, RCR can buy a 3-bedroom, or from a 3-bedroom can swap to a 4-bedroom, or they can get a similar size unit at 40% lower in terms of per square foot. Now, the biggest question you want to ask me is, isn't there a brand new GLS that's upcoming in Thomson Reserve? So we want to understand will the next GLS affect Thomson Reserve or not. So there is this particular one that is very nearby to Thomson Reserve and also very near to MRT as well. But I wouldn't think that it is big concern to me because this plot is actually a much smaller land plot and the total number of units is only 140 units. And given the land size, even though it has a very high plot ratio, it will most likely be a single block building. In terms of facilities, it will be very limited of what can be built inside the project. So if you were to compare between a small project versus a big project, like what I mentioned in my last few videos, it is not the number one concern that I will look at. So quite honestly, I wouldn't think that this project will affect Thomson Reserve. Now, the last part that we are going to talk about is why I will actually buy Thomson Reserve. Because of lack of new supply, it has a potential of being able to perform well. So we are going to look at 3 main case studies to understand why a lack of new supply can give you confidence in terms of buying into a project, even today if you are not considering Thomson Reserve. So the first project we are going to talk about is Panorama. That was before the entire Lentor area actually came out. Panorama was the only choice project if anybody want to stay in that area. Panorama actually clocked a total of 274 profitable transactions with 0 unprofitable transactions, even though it has went through the market ups and downs, the bull run and the bearish market. Both of these units, which is on stack 30 and stack 5, the latest transaction in 2025, this unit actually sold for a profit of $790,000. Whereas for the second unit, which is located on stack 5, sold in 2024 with a profit of $560,000. Whether the owners actually sold at a good time or a bad time, all of them still earn a profit. Now, the next project that we are looking at is actually Bishan Loft. And this is also located in District 20 because there is little to no supply of units competing with this project. That's why it was able to clock a total of 225 profitable transactions and 0 unprofitable transactions, with the highest crossing $2 million. Now, there are multiple units that have seen very good profits. If you look at this owner of Stack 9, 4th owner already, but still able to make $910,000. Similarly, for this one, 4th owner was able to make $250,000. The last project that we are going to talk about is actually Jadescape. And Jadescape is the most relevant and closest in terms of comparison to Thomson Reserve. Jadescape actually clocked a total of 282 profitable transactions, highest at $4.3 million, and 0 unprofitable transactions. Likewise, even though they are third owners, the third purchase, which by right should not be able to see so much profit, but they still enjoy very good profits. This one on stack 3, profit $400,000, and this one on stack 11, third owner but still profit $848,000. Even better than some of the new launches that were bought during that time. And to give you more perspective, I'm actually going to compare to these 2 particular projects. One is Jadescape and one is Park Colonial. Buying when the area has no supply versus when there is a lot of supply. Now, it is the only project in the Marymount area versus during launch in that area, there were similar projects of similar age, close to 2,900 units. In terms of location, I think both is actually quite similar because they are very near to the MRT. In fact, for Park Colonial, right opposite, there's a shopping mall called Woodleigh Mall. And why I want to show you this is because the buyers who have very similar amount of budget, like $1.2 to $1.3 million, their entry time also very similar at 2018 and September 2018. Jadescape, no supply. Park Colonial, a lot of supply. As a result, when it was sold at around the same time, profits is so much different, where Jadescape, the one that has no supply, actually make an average profit of $500,000 for a 2-bedroom, versus Park Colonial, which has a lot of supply, buyers have a lot of choices, their average profit only about $300,000. So based on this case study and based on the other transactions that I've shown you, I think it's very clear that as long as a project has no competitors around, be it in the resale market, be it in the new launch market during selling, the profits will tend to outperform the rest, just because buyers who come into this area, if they like this particular project, if it's built well, layout is good, buyers will not mind paying more for even a resale unit. And this shows up in the profits as well. And in fact, with the same amount of budget back then, do you know that buyers of 2-bedroom Jadescape actually profited much more than buyers who bought in Affinity 3-bedroom? And this actually counters the thinking of buying a bigger unit in the OCR area is better than buying a 2-bedroom in a city fringe area. It's very common to think that big units in terms of profits will always outperform small units. In a sense where if I'm talking about a 500 square feet versus 1,000 square feet, 1,000 square feet tend to profit more lah, just because if both were to grow at the same amount per square foot, the big units easily profit more, which is what we can see in a lot of projects as well. But in Jadescape, it actually counters everything that we are talking about. And I was very surprised to find out that even though those buyers who had the option to choose between Jadescape 2-bedroom at about $1.3 million, back then in 2018, those buyers who chose the bigger unit OCR area at Affinity at $1.3 million, their profit was much lesser, average at $340,000, which is much lower than a 2-bedroom in Jadescape at $500,000. So who say city fringe 2-bedroom cannot make more money than a big unit? It really depends on this one thing called supply. So today, if I'm talking about Thomson Reserve, because surrounding has no supply, this is why I believe strongly that Thomson Reserve is seriously something that you can look at, provided the entry price is correct lah, cannot be too high also. The second reason why I'll buy Thomson Reserve is because when I look at Jadescape, which is very similar to what Thomson Reserve is, this is what I noticed. So for Jadescape, which has a very similar buyer profile to Thomson Reserve because it is surrounded by landed enclave, I noticed that there is a huge number of private buyers who stay in private address with the highest profit at $4 million. Why is it important is because what I noticed is the entry price for these buyers sometimes can exceed the same price as what landed in that similar area is going for, and they are still able to sell at a very high per square foot and profits even exceeding 4 million. Of course, this is one out of many lah, but average profit was like crossing $1 million for the 5-bedroom. And why is it important is because there is a huge number of landed housing supply surrounding this project that can help to support the prices for Thomson Reserve as well. So it is very easy to think that with the same amount of budget, like for example $5 million, you as a buyer, you have two choices ma. First, you can choose between Jadescape, which is around a 3-year-old condo. It is a single level, not much renovation needed, versus you could easily, with the same amount of budget, buy a freehold landed. But of course, the freehold landed is not something that is like a new build, very good condition. These kind of landed tend to come in a very original condition that is not fully built up yet. Actually, why there is demand in big units like Jadescape is because it takes a lot to redevelop houses like this from original condition to even to a livable house. In fact, an average A&A to rebuild would cost easily from $500,000 to $1 million at the lower end. So in short, should you buy the big units in Thomson Reserve even if the per square foot is higher? And this is what I'm talking about, because when we're looking at Jadescape, for price growth for Jadescape, in terms of first day launch, for example, back then in 2018 to 2021, it's very common for developers to price the smaller units at a higher per square foot as compared to the bigger units. For the smaller units, back then, the cheapest ones start from 1,500 plus per square foot. But as for the bigger units, the per square foot can come as low as 1,300 to 1,400 per square foot. And That was like the trend for developers during launch day back in those era lah. But in today's resale market, big units start to see so much growth. These transactions were taken actually within 1 year from today. So you can see that big units, highest per square foot, can cross 2,500 per square foot. Whereas the small units like the 2 bedrooms and even 1 bedroom, the highest per square foot is only about 2,002 to 2,004 for a 2 bedroom. Even got lower ones at 2,000 per square foot. Can you still buy the big units in Thomson Reserve? Actually from here, there is actually a strong demand for big units in area like this, because if demand is not there, then the per square foot for the big units will not be able to grow so much to the extent where it exceeded what the smaller unit per square foot has gone for. I do see that because there is a lack of supply, because of the prices in the resale market, the big units still able to catch up or even supersede the small units per square foot. Thomson Reserve big units will still be something that buyers in the market in that area will still want to go for. But of course, it still boils down to the layout, most importantly in terms of prices as well, because if Thomson Reserve were to launch at 3,000 per square foot, it is still something that is not widely accepted yet overall in the RCR area. And this is where you need to catch the part 2 of my series if you want the latest updates to this project and the full list of available choice units that you can go for. If you don't want to go to Thomson Reserve, be sure to reach me at my contact number at 81262727. If you want to visit the show flat for Thomson Reserve and hear my analysis that's catered to your needs, you can reach me at my number here and we can talk at the show flat as well. Otherwise, I'll see you in my next video.